and welcome to the Premium Video Newsletter for Tuesday, August 20th, 2013. Looks like the market is higher today as we anticipated yesterday, but we're not out of the danger just yet. Let me give you some analysis and perspective so you can see what I'm talking about. Stocks edged higher for the first time in 5 days today, as better results from Best Buy and other retailers lifted the broad market. And when I mention the broad market, I'm talking about the S&P 500. Stock index futures yesterday declined to a 5-week low on a growing belief that the Federal Reserve will curtail their bond purchases next month. In addition, yesterday's drop in the S&P 500 was the first 4-day consecutive decline this year. Both Sunday and yesterday, I provided detailed analysis in regards to the strength and weakness in the broad market versus the tech sector, and things are playing out as we anticipated they would. We had several clues that the decline was not going to cause a major sell-off. First, when stock markets have major sell-offs, meaning several hundred points, all indexes are very weak. We didn't see that at this time. The Nasdaq was substantially stronger, so that was one clue. As a matter of fact, the Nasdaq was not even below the 50-day moving average. Until the very last part of trading yesterday, the Nasdaq was in a positive category as well. The second clue was lack of any internals that would typically alert us to a steep decline. For example, the high to low ratio was not unusually biased, and we didn't get a large number of signals moving in one particular direction. So the next question is, where do we go from here? On a technical level, the broad market is sitting on very fragile support level. I do believe we will move higher unless the news tomorrow is extremely surprising. If we maintain the 1645 level, we will most likely bounce to the 1680 level within the next few days. I don't know if we have enough strength to move higher, but I think we will drift from this area a bit higher or possibly stay range-bound and keep testing the lows. Although, keep in mind, as I said earlier, we are in fragile support area here. So if there's anything new or surprising in the next few days that we didn't already know, we will head down to the 1640 area and possibly lower. I think the next few days will tell us a lot, and I'm expecting volatility starting tomorrow. This is the time to really monitor the subsectors and see if we can get any clues from there. Remember, we are sitting right at the 50-day moving average, so the broad market is a target for selling right now by large hedge funds and mutual funds, so don't get very bullish just yet. One positive indication that we are going higher is the transports. They are substantially stronger than the broad market right now. I follow the transports closely during important turning points, and right now it seems they are moving higher with momentum and volatility, something we want to see on the upside. Expect some resistance at the 116 level, but overall this is confirming my analysis in respect to the broad market. Lastly, the retail sector, which was partly responsible for the decline we saw, is rising as well. We have a gap we have to fill at the 80-90 level, but we are headed there at least for a test. The bond market is looking interesting today. Traders are covering shorts ahead of tomorrow's release of the minutes of Federal Open Market Committee's July 30 through 31st policy meeting. Tomorrow, economists will scrutinize the data from the July Fed policy meeting for any hints as to when the Fed will curtail their monthly purchases of $85 billion of treasuries and mortgage-backed securities. Technically, yesterday we covered our short position. I explained that if the bond market doesn't bounce too much and stays at the low or near the low, I would maintain a bearish short-term sentiment. However, we didn't see that, and what we are seeing now is more what I was expecting. This is why I warned you yesterday to only trade this channel to the short side. It looks like we're channeling again, and I have a feeling we'll be moving higher at least to the 126 area. Much of what happens is very dependent on news coming out tomorrow. And right now, the market is interpreting tomorrow's news as nothing new. If that's the case and tomorrow we hear what we've been hearing for the last month, then there's a strong chance we will rally strongly. But if we start hearing something different tomorrow, like for example, that we're going to cut starting in September, then we will drop hard and fast. But right now, the bond market isn't seeing it, and I don't want to start speculating on something completely unknown. For tomorrow, watch the bonds and wait for the top of the channel at the 127 area. I will update you tomorrow if I see us breaking the low. Interestingly, the US dollar is behaving similarly to bonds in regards to tomorrow's news. The dollar is behaving like the stimuli program is not going anywhere anytime soon. If traders thought we would hear anything different tomorrow, the dollar would be much higher right now. And we're not seeing it. We're actually breaking lows, which is great for our position. But it also tells us the same thing the bonds are communicating to us right now, that traders don't think anything will happen anytime soon. We have less than half a point to our profit target. And if the Feds don't give us something surprising tomorrow, we will hit our profit target soon. The big currency news is the euro currency, which is higher after a report showed Eurozone's second quarter construction output increased at its quickest rate in 2 years. Remember what I said a few days ago. We won't break out unless we see something new, and this was the catalyst we were looking for. The breakout is significant, but we have to make sure it's not a false breakout. One good thing we have going on our side is the fact that this is a very long-term breakout. Remember, the longer markets stay range-bound, the better the breakout and the better the trend, the longer the range-bound cycle will last. Here we have a wide range-bound channel that lasted for over 6 months. The next test will be at the 135 level to the upside. If we start coming down, I would watch the 132 level carefully. If we do go down to the 132 level, it doesn't mean we are back to range-bound territory. For that to happen, I would want the euro to go below the 130 level. But for now, let's see if we can maintain the current level above the breakout point without falling down to the 132 level. If we can do that for a few days, many institutional buyers will begin accumulating the euro, and that will send it higher. Lastly, it looks like our analysis into the crude oil market was fairly accurate. The buyers saw that momentum was waning to the upside and began selling the energy market fairly strongly today. It usually takes about a day or two after the new level cannot be broken that selling will come into place. Remember what I said yesterday. Markets are presumed to be weak unless something can overcome that presumption, and we didn't see it here. The first and most important sign was the fact that we almost had no reaction to the Egypt political situation. This gave me very strong warning about the upside to this market. Technically, what I'm seeing right now is a sell-off to the 102 level. Once we get there, we will see if anything changes. But as of right now, that's the next target level. There's a few setups for tomorrow I want to share with you today. There's a lot of signals to the upside today, which suggests that we're going to open higher tomorrow. It doesn't mean we're going to close higher, but it means there's a higher chance that we will be opening higher. The first setup is a tail gap to the upside. The ticker symbol is EWP. The second setup is a 4x4 to the upside, and the ticker symbol is SWK. And another 4x4 to the upside, ticker BWA. All trades have the same entry and exit rules. The entry is 15 cents above today's high on a buy stop, and if filled, place a sell stop 10 cents below today's low. Cancel all orders if no fill by lunchtime New York time tomorrow. And don't take on big positions because we're expecting volatility in the second half of the day tomorrow. That's it for today. I will update you tomorrow morning and earlier if I see something unusual happening. Expect volatility beginning tomorrow going into Thursday's session. Have a great night, everyone.